Good afternoon. This is Sean Golding with Golding and Golding. For several years now, we've been preparing our 5 top facts, 5 key facts, 5 important facts, 5 things to know about the different international information reporting forms, the FBAR, Form 8938, 3520, etc., etc. We have been updating those forms over the past year or so, but some taxpayers have basically made it known to us that they would prefer if we could put it in a YouTube video sometimes for some of the more complicated stuff that's very difficult to read through because it takes time and most people don't have the time. And so we've been trying to do that with some of the more complicated forms, and up today is the Form 3520-A, which is used for U.S. owners of foreign trusts. So let's just jump in and try to keep it to 5 to 7 minutes. First, it's important to determine who has to report, right? So we're talking with individuals, okay? 3 main categories of individuals: U.S. citizens, lawful permanent residents, foreign nationals who meet the substantial presence test. If you fall into one of these 3 categories, typically you are a U.S. person for tax purposes. We'll get to treaty elections in a moment. And if you're a U.S. person for tax purposes, you have to report your worldwide income. You have a whole bunch of international reporting required, and one of them is to report your foreign trust. So first things first, the Form 3520 and 3528 are not the same. 3520A is used to report ownership of foreign trusts. That is also used with Form 3520, but Form 3520 has additional components to it. The one you're most commonly aware of are individuals who receive gifts, or large gifts or inheritances from foreign persons, from foreign entities, or foreign trust distributions. Form 3520A is used to report ownership of a foreign trust. Unlike most of the other forms, Form 3520A is due 75 days after the first of the year. Typically, it's going to be March 15th, unless another date applies. Taxpayers have to be sure they get that form in timely because the IRS likes to penalize it. And for taxpayers who want to apply for an extension, it's not a Form 4868 typical. It's a Form 7004. It's a little bit different. Taxpayers have to be sure to lodge that in order to timely have an extension for 3520A. It's not the same as 3520. Even if they file a tax return extension and they get an extension of Form 3520, it doesn't automatically extend 3520A. So taxpayer first has to determine what type of trust they have, right? Is it grantor or non-grantor trust? This will help to complete the form. And let me take a step back. So you can have all different flavors of foreign trust, right? You can have like your offshore asset protection trust. You can have foreign pension. You can have a domestic trust that has foreign components to it. You can have a foreign trust that has domestic components to it. And it goes on and on and on. And so it's important to evaluate that before completing the form because that will impact just how complicated it is. And of course, to double check whether you have to complete the form in the first place. It has to be a U.S. owner of a foreign trust. They don't have to own the full amount of the trust, but it has to be a U.S. owner of a foreign trust. It's also important to determine a grantor versus non-grantor to determine what the potential tax implications are, of course, right? With a non-grantor trust, U.S. beneficiaries are typically going to be taxed on the income. With the grantor trust, it's going to be the owner who's taxed on the income. Trusts come in all types of shapes and sizes, like we just mentioned, but other things to consider is that you may not really think you have a trust, but you do, right? From a U.S. tax perspective, for example, foreign pension. Many foreign deferred retirement and non-retirement trusts will avoid having to file these forms under Revenue Procedure 2020-17 along with the proposed regulations, or there are some specific revenue procedures if it's like a Canadian RRSP under, I think it's 2014-55. So it's important to look at all this before, right? Because why would you want to complete this form if you don't have to? So important to determine who's the owner, what type of trust, and that will help determine the extent to what needs to be reported. If you received a foreign grantor or non-grantor trust beneficiary statement, this will help immensely in determining what your tax implications are, because if you don't receive one of these beneficiary statements, then there's certain default positions in the 3520 and 3520A. These default positions, as you can imagine, are not the best positions. Typically, it might result in additional tax and additional interest income. When completing 3520A, you need certain information from the trust to do so. If you're not able to obtain that information, typically you want to do the best you can, but sometimes it's just not possible. The IRS wants to be substantially complete, and so you want to try to obtain the balance sheets and income statements. If it's a trust that you own with your family, and maybe you have an outside foreign accounting or chartered accountant firm that's helping with the accounting and the bookkeeping, it's going to be easier. If it's because you have some type of hybrid foreign pension, foreign retirement, maybe you used to work in a foreign country, you no longer work there anymore, so you're not able to maintain the type of pension you had before, so it's moved into a more of a trust type of situation, and it's more of a foreign grantor trust because there's no employer contributions. It can get much more complicated. So these are all things you want to consider before completing the form. One more thing to know. Typically, even if you make a treaty election to be treated as a non-resident for tax purposes, because possibly you live in a treaty country and you live there a substantial amount of time, you're still supposed to file most of the international information reporting forms. Now, with the FBAR, there's a recent case, ROS Day, hope I'm pronouncing that correctly, in which the court said, no, if you're foreign and you qualify as a non-resident, you don't have to file it, even though IRS publication 5569 has a specific example that wants you to do so. The proposed regulations make it sound like 3520 and presumably 3520A. If you make the treaty election, then you don't have to file Form 3520, 3520A, at least for the portion of the time that the person is a non-U.S. person for tax purposes. So if it's a full year, which is super common, then you may not have to file the form in the first place. So this is important to do because you don't want to file the form if you don't have to. If you're out of compliance, there's various programs you can use to get into compliance. If you're willful, unfortunately, there's only one program. It's VDP, which is used for both offshore and domestic. There used to be OVDP, which is an offshoot, and you'll see it online a whole bunch. But since 2018, I think September, they got rid of that offshoot to VDP, and it was merged back into the traditional VDP program that's been around forever. If you're non-willful, there's various other options available. There's the streamlined procedures, there's reasonable cause, and then there's the delinquency procedures. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.